on balance, I think if you sum up all the flows, you could put us in the inflationary camp. And by the way, it's really the only way we're going to get out of our debt trap. You have to inflate it away.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 11th through November 18th, 2024, while supplies last. First, we feature backdated 1-ounce silver Austrian Philharmonics at just $3.09 over spot per ounce. We also feature the limited edition 2024 1-ounce gold UK Lion and Eagle coin at just $99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Doomberg from the very popular Doomberg Substack, the #1 financial contributor on Substack. Doomberg, thank you so much for joining us today.
Elijah, great to be back with you. No shortage of very interesting things for us to talk about.
Definitely. I guess we can start off with the election, Trump winning. I think for one, it shows the mainstream media now doesn't really have much power, and I think that's a very good thing. But also this narrative in the energy sector about climate change and all of that, we're seeing that waning as well. Your perspective on how the Trump win is going to impact the narrative of climate change?
I would characterize Trump's election and also how the Republicans did in both the Senate and now the House as a sort of shattering event. I think, to your question, the mainstream media has really beclowned itself for many years, but in particular in this cycle. I think it's also the end of polling, which will be replaced by betting markets, which seem to be far more accurate in their outcome. It's a funny thing when people are forced to put money behind what they put out into the zeitgeist. It tends to focus the mind. Let's put it that way. I think the impact of Trump's win on the climate change agenda, as driven by the mainstream media, by the way, the two are very, very intimately connected, cannot be understated. Of course, it was the subject of our most recent piece, Shift Shaping. This is a classic sort of Ben Hunt narrative shift, where everybody now realizes it's okay because everyone else already knows that you no longer have to toe the sort of climate change party. And I think we're seeing that with the very poor turnout at COP29 in Azerbaijan. And truth be told, if we sort of polled our own contacts in industry, almost nobody really believed climate change. And they were all just towing the line because everyone else was towing the line. And in a way, Trump has made it okay for people to speak their own personal truth on the subject. And we're going to see a stampede to the exit. I think the progressive environmental left is in deep denial about what has just transpired. In the piece that we just published, we detailed what we think Trump will do in the first 90, 120 days. And this is going to set back, the carbon movement for a decade at least. And we think it's a fatal blow.
Can you expand a bit on that? Because I know the UN Climate Summit last year was a huge event. Now you've talked about how there may not even be a third of the attendees this time. What does this, I guess, mean for climate change and then the energy sector going forward?
Yeah, we put a pro-tier presentation out last year after COP28 called Coulda, Woulda, Shoulda. And in that presentation, we predicted that COP28 would in fact mark peak ESG. It would be the Icarus print of the ESG movement. And I think that call will turn out to be relatively correct. The climate change agenda is just not popular. And we're publishing a piece tomorrow. I'm recording this today, but obviously on today's Tuesday, I guess it is. And we're publishing a piece tomorrow on Wednesday about this really fascinating vote result in the state of Washington, which is really a hotbed of sort of liberalism, where they voted to halt any natural gas bans. Even though the state went for Harris by almost 20 points, the same voters in this really deep blue state decided that they wanted to keep their natural gas stoves and their natural gas furnaces, all this other stuff. But I don't think you could separate the two results. Like we are seeing, as we have long predicted, that people are more than happy to engage in pontifications about climate change. But the moment it comes down to making actual sacrifices to their standard of living, in their way of life, almost nobody wants to, except for the very hardcore. And the very hardcore is a very small percentage of the electorate. And Trump has decided that he is going to smash the climate change agenda. He's going to pull the U.S. out of the Paris Accord again. His ambition is to spark a massive investment boom in heavy industry, including energy. The amount of carbon we emit is just one of the many numbers that will soon go up, and he doesn't care. And I think there's plenty of people who have been quietly waiting for this opportunity to jettison their positions on the climate agenda. Now, to your question about what Trump actually means for energy, as I think I predicted the last time we spoke, it's very bullish for energy supply, which is bullish for the economy, and bearish for energy prices and bearish for energy equities. So there's a lot of excitement right now in the market, and stocks are booming based on the Trump win, especially, speculative vehicles like Bitcoin and Nvidia and so on. But in the long term, once this all settles down, I think it's a sobering message for those who are owners of energy producers, because the price of oil, we believe, is going to trend down. The oil companies make all their money on price, not volume. Trump is very pro-volume and needs cheap hydrocarbons to fuel the manufacturing renaissance that he hopes will be the signature accomplishment of his second swing as president.
We have a few viewers' questions on energy, and they revolve around natural gas, oil, and uranium, or nuclear power as well. Ernest wants to know, while I'm very pro-nuclear, wouldn't a $2 natural gas price make electricity generation much cheaper and faster utilizing natural gas plants in the U.S. compared with nuclear? So on that topic, also, what do you see Trump administration, do you see it still positive for nuclear energy versus natural gas? Your perspective on that?
Yeah, I think it's unabashedly positive for nuclear energy. Natural gas is actually closer to $3 right now than $2. That's mostly because the weather models are predicting a cold snap next week, which, natural gas is very sensitive to the temperature. But in the long term, the most important word that he said was faster. Natural gas is faster, and it will be the bridging fuel for AI. The thing that I think most people are missing, that we have been pounding the table on, is all of this AI data center energy demand has to go off grid. We've seen rejections of on-site co-location of data centers with existing nuclear power plants that are already tied into the grid by FERC. The only way to circumvent federal oversight is to not be connected to the grid that serves multiple states and to do everything offline. And I think that's where we're going. So I think in the early days, it'll be natural gas. Natural gas goes in one side of the building and data comes out the other. And over the long run, it'll be nuclear, because that is I think the best answer. But one of the things we're hoping to see from Trump is a complete overhaul of the NRC. And if we don't see that, then the prospects for nuclear, regardless of Trump's views on the subject, I think are a little dimmer than what many of us would be hoping for. But natural gas, for sure, at even $3 per million BTU, which, as you know, is about $18 a barrel oil on an energy content basis, is still the cheapest and cleanest burning hydrocarbon out there. And if you no longer are shackled by the need to count carbons, then in many ways, natural gas is superior to nuclear, because it doesn't come with all of that artificial baggage that the Malthusians have been so successful in putting into the minds of the everyday voter.
Felix wants to know about electric vehicles. He asks, what effect do you think EV adoption has had on the oil market? And would you say that the oil industry is now in decline because EVs will eventually replace all 2 billion cars on Earth?
No, I think that's a rather ambitious forecast, let's say. That's not the word that originally came to mind. I think EVs serve a role, and because of the inelastic nature of the supply-demand balances in the energy sector, the penetration of EVs in China, for example, has had a measurable impact on the demand for oil, which is one of the many headwinds that is facing the price of that all-important commodity. But in the long run, the gating function of demand for oil is production. the number of EVs being produced is nowhere near the level required to shrink the number of ICE vehicles on the road. In other words, the total size of the fleet is a flow, right? You have new cars produced, you have cars that are being totaled or otherwise retired on the back end. And then if you're displacing some of those new cars with EVs, but you're not displacing enough because like the average lifespan of a car is somewhere between 12 and 15 years now, there's a huge amount of cars on the road. And the total size of the internal combustion engine fleet continues to grow. But most importantly, oil is not just about gasoline-powered cars. It's used for diesel, it's used for jet fuel, it's used for chemicals. And as refiners get more flexible in their ability to manipulate the molecules to serve the various demand signals of the end markets, we are going to see that every molecule of fossil fuels produced will be burned by somebody somewhere. And the gating function of demand for oil, for natural gas, for coal is production. And so all primary energy sources are additive. If somebody is willing to use electricity to power their vehicle and they're getting that from the grid, all that really does is free up fossil fuels for somebody else somewhere to take advantage of that and frankly at a lower price. And so that's why you see the demand for fossil fuels is an upward sloping, slightly sinusoidal wave where we go through peaks and valleys because the investment cycle in the oil and gas sector is different than the business cycle, and sometimes they're mismatched. And because of the inelasticity of prices, you see these wild swings. High prices lead to more supply, low prices lead to more demand. Forever thus, by 2030, we'll be burning measurably more oil than we are today. The same for 2035 and for 2040.
Now, back on uranium, we have a viewer wanting to know, you mentioned in another interview that you think uranium is plentiful. Can you expand on that? What are your thoughts for the next 5 to 8 years and the structural deficit currently?
So the structural deficit is different than the total resource base available to humanity. Right? And people often confuse the two. But also that structural deficit is a bunch of mines that have been proactively taken offline because the price of uranium has been too low to justify keeping those mines open. If the price of uranium skyrockets to 200, there will be a supply response, is my point. And of course, there's a difference between, yellow cake and enriched uranium and what is needed to go into these nuclear power facilities. Beyond that, all of what we today call nuclear waste is really just future fuel. If we want to run them through fast breeder reactors, we can recycle that nuclear waste and create new fuel. When we say uranium is plentiful, we're not really making a comment about the near-term price supply demand of uranium itself. What we're saying is the supply of uranium will never be constraining to the rollout of nuclear. There's plenty of it. We have thousands of years of supply. We haven't really been pushed to go look for it all that hard because it has never been constraining. What has been constraining is politics. And to the extent that politics are changing, nuclear will continue to proliferate. But the supply of uranium will never be constraining to the rollout of nuclear because you could double or triple the price and nobody would really care. It wouldn't show up in the cost of electricity in a meaningful way.
Now, when it comes to geopolitics, I know that is something that we're going to probably see a lot of changes in this new administration. A lot of people are hopeful because Trump didn't start, a major geopolitical conflict in his first term. And, we're having issues in the Middle East. We're having issues with Ukraine and Russia, wars going on. So your perspective on that and how it also could impact energy going forward.
So peace is very bearish for energy prices, right? I mean, geopolitical risk is one of the reasons why people like to get long oil and to a lesser extent, natural gas. Trump ran on a campaign of peace. It remains to be seen whether he can accomplish that, especially in the war in Ukraine. I think his at least looking at what he said on the campaign trail versus the realities on the ground, I think his concepts of his ability to end that war rather quickly on favorable terms is a bit naive. Let's assume that he has good advisors around him, and now that the campaign is over, he's going to approach the problem with a bit more realistic potential solutions. It's a very difficult problem to solve because the two sides are nowhere near recognizing the realities of the ground, in my view. Middle East is a bit more of a black box for us. Trump has been all over the map, priding himself on not having any major wars, at the same time being very hawkish on Iran and very supportive of Israel. And it remains to be seen whether he can broker a de-escalation in the Middle East, but let's hope he can. And then he seems to be very much more interested in China, mostly from the trade perspective. I don't think he's really all that emotional about the Taiwan issue. He views the Chinese Communist Party as having taken advantage of decades worth of U.S. leadership, and in his vision of America, we make stuff again, and we have plentiful energy, and manufacturing jobs come back, and union jobs come back, and we take back control of our own military supply chains from China. That's a big, tall, heavy order. It seems to me that it would be very inflationary. But he views China as an economic competitor, not necessarily as a military one. And so in a world where a reasonable peace can be achieved in Ukraine, which is a big if, in a world where de-escalation occurs in the Middle East, and where the U.S. and China are no longer potential military combatants, but in fact are just limited to being economic ones, I think that would be quite the accomplishment for Trump, and let's hope he can pull it off.
Definitely. No, the impact on energy. How are you seeing energy markets reacting to Trump being elected? Because, I mean, obviously we've seen the stock market react positively, so it seems like people are hopeful that he will be good for the economy. But with respect to energy markets, have we seen them fall, or is there a reaction that we've seen from energy markets anticipating peace going forward?
I mean, I think oil is flat to down. Oil is a managed market. Let's never forget, we have OPEC. We have a cartel that has a desire to keep oil prices higher than they otherwise would be. Natural gas is perking up a little bit, mostly because of the weather. But oil is trading, flat to down from the election, whereas stocks and certainly Bitcoin have been mooning. And so on a relative basis, it hasn't been very good for the energy markets. Look, I think Trump wants to drill. And that's bearish for the price of oil, and by extension, bearish for E&P equities. There's no other way to say it. And these same companies have very little track record of being disciplined. Given the chance to drill, they will drill. Trump seems intent on giving them that chance. And so I think, all things being equal, absent a geopolitical event, which has been our call all year, by the way, oil is not going to go up. Oil is probably going to go down, and oil has sort of trended the very sort of small slope, but mostly downward all year. It's just sort of stayed in trend. And despite all of the geopolitical tensions that we had just discussed, the market is well supplied. There is demand switching into natural gas, especially in China, and EVs switching away from gasoline. And so at the margins, we're seeing a bit of softening in demand. And oil prices coming down. Now, if they get cheap enough, people will burn it, and it'll perk back up, and it's forever thus. This is the cyclical nature of the energy markets. But all things being equal, in bullish production is bearish price and bearish equities.
Now, another issue that was major during the election was inflation, and we've seen that hurting the middle class quite a bit over the last 4 years. Although a lot of people that we have on this channel might argue that inflation didn't really have to do with who was president more fundamentally. It had to do with the Federal Reserve creating so much money, especially during COVID, that really brought down the value of the dollar. Your perspective on inflation going forward now that we have a new administration, Ivan wants to know, is there any escaping stagflation, and do you think interest rates will come back down?
Yeah, it's a great question. Obviously, these are really difficult to model flows, right? You have certain forces that are inflationary, other forces that are deflationary, and then you're trying to sum them all up and see which side of the scale has more weight. I think low energy prices is deflationary. I think if Trump cuts the bloat in the federal government, that would, of course, be deflationary, but I don't know whether he can, both because it's hard and also because it would almost certainly trigger a recession. The government has become such a big part of our economy that if you take a hacksaw to it, you're going to trigger a recession. And no politician ever wants a recession while they're in office, right? So we may be trapped, in which case that would be inflationary. Whether Trump follows through on his immigration plans and the deportation of those who have arrived here outside of the law, all the signs are that he will do. There's some discussion as to whether that would be net inflationary or net deflationary. I think it creates a shortage of workers, which means higher wages, which would be rather inflationary. But then there's the sort of all the benefits and government spending that are flowing towards such people that turning that off would be deflationary. So it's hard to model. I think on balance, Trump is an inflationary force. He likes numbers to go up. And I think if we're going to reshore and we're going to reestablish military supply chains in the U.S., U.S. worker expectations compared to the countries we're bringing that work back from are higher. And so, and tariffs, of course, I think are probably inflationary as well. So on balance, I think if you sum up all the flows, you could put us in the inflationary camp. And by the way, it's really the only way we're going to get out of our debt trap. You have to inflate it away. Don't necessarily have to hyperinflate it away, but to get your debt to GDP down to a more reasonable level, only a couple of years of 8 to 10% inflation will do it.
Now, gold often anticipates inflation and reacts to numbers that we've seen, obviously, over the past couple of years with high inflation, and gold is up 30 or plus percent this year. But we did see quite a bit of a sell-off after the election results. So do you attribute this pullback that we've seen to the election, and where do you see gold prices going from here?
So I think it's a mix. I think the very strong response of the dollar to Trump's election, his electoral victory, has been bearish for the price of gold, right? I mean, the two typically trade in an inverse way, although not recently. Like strong dollar had been bullish for gold, but once Trump was elected, we have seen the sell-off. I think part of it is also the disappointment coming from Kazan, which we wrote about. And full disclosure, we were uncomfortably long gold, and then after we assessed what happened at the Kazan BRICS Summit, we took about a third of our position off. Still very long gold and a core part of our savings. But we felt like expectations had not quite been met, and gold had a really good run. And in our view, this is probably just a healthy consolidation. And there will be a price where we probably might nibble back in and build back our earlier position. I think it's trading around the low 2600s today. It much like uranium when it hit 110. The parabolic nature of the gold chart was always unhealthy. And at some point, a nice consolidation, a little bit lower, was probably a good foundation for the next leg up.
So you are still bullish long-term for the yellow metal?
We own a lot of it. And I guess that's the ultimate statement of your bullish or bearish thesis. But again, we don't view gold as an investment. So the fact that the US dollar is getting much stronger means the rest of our portfolio that isn't gold is got a higher purchasing power. And so we don't really watch the price of gold that much. What happened with me in particular was gold had appreciated so quickly that it had become too large a portion of my savings for me to feel comfortable continuing to hold it. And so I just shaved a bit off, bring it back in line with the other things that I use to preserve the purchasing power of my wealth for future generations. And that's things like land and collectibles, like we talked about before. Gold had become far too large a portion of my savings. And so, it's always good to take a little bit off near the highs, which we did. The fact that gold's gone down does not make me happy about that decision, by the way, because if you still own it, you should want it to keep going up, even if you prematurely sold some of it. But by and large, I think gold serves its role in my portfolio, which is a mechanism of savings, not really one for speculation. When your savings vehicle goes on a run like that, you should take a look at it and prune it, which we did. But by and large, my core thesis is that the gold that I own is for 30 years from now, not 30 days from now. And what the price does in the next 30 days really doesn't matter to me that much.
Now we have a question from Scott about other resources. What are your opinions on resources such as farmland or water investments?
Yeah, we personally own a fair bit of farmland and other forested properties and so on. The old adage is true. They're not making any more land, especially when you understand your local real estate environment and can parlay, your own liquidity into being able to pursue opportunistic transactions, which is how we try to gather the sort of farm and forested land that we own, and commercial properties as well. I mean, we've dabbled in that. I think, like any savings vehicle, any knowledge that you can bring to it, the better you'll be. Like if you're going to save by collecting rare art. Well, then you should know the art market. We don't, so I don't own that much of it. But I do know the watch market, for example. And so like I do have a fair allocation of my savings to that collectible market. But for us, it's mostly land and gold and local land that we understand. We don't like to invest in funds or things like that because then you sort of cede control to somebody else and they're taking a carry on your savings. But yeah, farmland, great. We're not making a lot of it. Same with, other properties, especially in markets that you understand. I think that's like the most important thing. If you're going to participate in using land as a savings vehicle, you should know the markets you're investing in.
And regarding that is, as you mentioned, very important to only invest in or save in what you know about, right? And what are maybe some of the top investments that people should maybe learn more about, in your view, based on this Trump win? How is that going to be in changing the investment landscape, and what should people research more about, in your view?
Yeah, it's a very interesting question. When I take a step back and look at what's happened since it became clear on election night that Trump was not only going to win, but the Republicans were going to take full control of government, which they have since done. There's a lot of euphoria in the market right now. So I wouldn't say that the market is a target-rich environment for deploying new capital. I think you would agree that we've seen Bitcoin, for example, ramping up to almost $90,000. Bitcoin is kind of a marker for us for sort of the froth in the market. And broadly speaking, if you're trading, that's one thing. But if you're investing, which is what we try to do because we're not good at trading, you don't really want to be buying, chasing momentum rallies like this, because things always sort of equilibrate, means or regress to probably a lower price you can get into the stocks that you like. There's certain stocks that are leading the market right now that we frankly just don't understand, but we observe them and we respect them and we just don't participate in them. Nvidia, Tesla, the sort of the big name stocks that are trading at really crazy multiples. Doesn't mean that they can't trade for 3 or 4 times what they're currently trading for, by the way. It just means that they're trading at levels that we couldn't open a position in, given our own personalities. So our whole view post-Trump is let's let things consolidate. Let's see what the market does. And let's see if he actually gets sworn in. I mean, the proposals that he's putting out there are frankly dangerous for anybody other than him to put forward, I suppose. He is proposing to take power away from very powerful people, and we'll see. Like he's not yet president, right? The election has not yet been certified, for one. He's not been sworn in. January 20th is an important day. Our view is let's just wait, see, watch the markets. We've raised some cash with some of our sales of gold and other things, and there might be a better entry point in the future.
And if our viewers are interested in continuing to track this with you, they can go to Doomberg.com. Can you tell us a bit about that?
Yeah, everything we do is at Doomberg.com. All of our articles, our pro tier, a comprehensive list of all the podcasts that we've appeared on. Elijah, always great to speak with you. I really enjoy our regular conversations and very much looking forward to the next one.
Great. Well, it'll be great to speak to you soon, and maybe when Trump's in office next time. We really appreciate your time, Doomberg, as always. Thank you so much, and God bless.
You bet.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 11th through November 18th, 2024, while supplies last. First, we feature backdated 1-ounce silver Austrian Philharmonics at just $3.09 over spot per ounce. We also feature the limited edition 2024 1-ounce gold UK Lion and Eagle coin at just $99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.